Okay, what we have here on screen is the S&P 500 index, and we can see that for the past 1 week, like starting since 16th of March when it's tried to break a new high. Last week I mentioned that it's very likely it's going to be a false breakout, and thereafter it came back down. Okay, so okay, this level of 3950 is a very strong resistance, and we can see that over the past few days, right, it has been rejecting this particular resistance 3950. Okay, so because of this resistance of 3950, I'll be expecting more downside to the US market. Okay, so if we look at the Dow Jones has been rejecting this high of 33,000. Okay, this level 33,000, and it's been pulling back since then. Okay, and we have the Nasdaq. So Nasdaq, among the three US market, is not as strong. Okay, and we know that from previous meetings is that the technological sector has been taking quite a beating lah. Most of the stocks are down like 20 or 30% from its high. Okay, so that's the reason why Nasdaq has not been performing that well. All right, so if we look at the Fed's balance sheet, the Fed has continued to purchase from the open market, treasuries. All right, and in the WhatsApp chat, I presented a YouTube shortcut, a link to a repo market. So basically, this repo market has turned negative, meaning to say, um, banks are asking financial institution, like other mutual funds or hedge funds or whatever funds, whether they or even brokerage, whether they want to borrow money, and they are paying them, they're like, okay, please borrow $1 billion, and I'll pay you this amount of interest for you to take this money. Okay, so that's what's the reason for me to show this uh, or share this particular video about the repo market. Okay, so it's like the whole market is flooded with a lot of cash, free cash, and I mean this is I would say is probably a signal, that we might have one final euphoria rally because there's too much cash, everything's buy up, but we have to be very careful, with the next run. Okay, so at this moment, I would say the market is likely going to be consolidating for a while. Okay, so we have to just be mindful of our positions. Okay, so this is Hang Seng Index. Okay, last week I mentioned about this being an inverse head and shoulder pattern, and there's a high chance of it dropping. Okay, so last week was somewhere here. All right, so 1 week has passed and it has broken the support down. Okay, and I've drawn this right as the likelihood of where it will hit as the major support level based on this pattern. Okay, based on this inverse this head and shoulder pattern. All right, so this is roughly about like what 26,000 area, which coincide with the levels here of support. Okay. All right, so we can right over here we can probably look at accumulating, like Hong Kong Tracker Fund, or even like the Vanguard China, all China Fund, or even the Hang Seng Tech Fund kind of stuff. All right. So for the China market, this is the Shanghai Composite. So similarly, um, it is doing a very deep pullback. Okay, and this shows that there is a likelihood of it breaking down further. Okay, but this being a very strong support region plus the 200-day moving average, it might not. Okay, so but the major one that I've highlighted before is this area, this colored region. Okay, so we just have to be patient, and wait. Probably in the next 1 or 2 weeks, it might hit this area already. So at the moment, we just avoid the Hong Kong market first. Okay, the Straits Time Index, I've mentioned that is due for like a pullback, but unexpectedly it has been hanging high. In fact, moving up higher. It was here for the last debrief, and then it gap up and stayed there. And now with the CapitaLand issue, it has also kind of like prop up the Straits Time Index property counters, like your CityDev. Okay, so it might continue to stay here, trading sideways. Okay, so we just have to um, watch out, because if you continue there, that there's a possibility that it might continue to rally. Bearing in mind that the STI has been lagging behind the global markets, so it might be playing some catch up. Okay. First up, it will be the sector, the tech manufacturing sector. Okay. The stocks like UMS. All right, this UMS has done a very sharp V recovery, having this bounce off the 200-day moving average. Okay, so I would say this is still strong. Okay, but in terms of short-term movement, it might be a bit more sluggish. Now the today's one will be AEM. Okay, I'm trying to search for some news, but I didn't find any. Okay, there's a sharp rally today. All right, and it might have a second day. Okay, it might. So if you are a short-term trader, you might want to focus on tomorrow. If there's a huge rally, you might just go in and get out. And take your profit and run. Okay, so this is AEM, and of course we still have Venture. Okay, so Venture also similarly tested or almost test this 200-day and this support region that I've mentioned before. Okay, and it has rebounded up for the past 1 week. Okay, so ultimately there's some activity in this tech manufacturing space, so we should probably look at some of the stocks that have not ran. There is Valuetronics. Okay, Valuetronics is stuck in this support region. Okay, and there is some volume coming in. There's a sell down, and then there's a volume picking up or accumulating. Okay, so you can watch for this. If it continue to break above high, like rejecting the support, in moving up, you can probably look into this. And we have Franken. Okay, Franken has been trading just below the resistance. Okay, so for those who trade breakouts, you want to wait for a breakout above the level of 145, 146. Or even if it can test below here 137, you can also look at like accumulating small amount. Even if it rebounds, or if the soul sector move right, it will continue to rally and continue its bullish trend upwards. Okay, so this is Franken. ISDN, I've mentioned this stocks like 2 weeks ago, somewhere here. Alright, so it has been trading sideways. Okay, so it's waiting for this 20-day moving average to turn up. So if it continue to inch upwards, right, you want to watch out with this. Okay, this is also dealing in equipment manufacturing or electronic manufacturing. Okay, so you can also watch this. So these are the 3 stocks you could watch. If the whole tech manufacturing stocks are moving strong or hot. Okay. Okay, Maple Tree NAC at a 2 days rally after testing this 50-day and 20-day moving average. Alright, so I'm expecting more upside to this. Okay, this is a good rally with some nice volume. Okay, bearing in mind that this 107, 108 area, right, is a very strong resistance. Okay, so because of this rejection over here and here, back in June. Okay, and then the most recently one in January. Okay, so I would say most likely it's going to retest this area, and if we continue to hang in there, and if the whole situation like in Hong Kong gets better, then this will likely to break out. Okay, Maple Commercial. Alright, Maple Commercial had formed a nice base here, forming at the support here at the $2. Okay, so recently it's been trying to turn upwards. Alright, and today there's some volume, with increased today there's some rally, okay, with increased volume. So you would like to watch for the next few days, for it to continue to make new highs or continue its rally upwards. Okay, OCBC, the banks OCBC and DBS continue to stay strong. Alright, so that's what is holding the STI up also. So it's been trading sideways within this range, like 1150 to 1170, 1180. Okay, so recently has been hovering here at the low end, 1150, 11 to 1160. Okay, so it's been consolidating quite well, and it's almost going to be testing the 20-day moving average. Okay, so if any rally happens from here, it might have a short-term rally upwards. Okay, but to me it's kind of a risky trade really. Okay, having seen this rallying up so much, and it's being there's a huge gap between here and the 200-day moving average. All right, so ideally I would wish it for it to test the 50-day moving average, for this to catch up. All right, and for the whole economic situation to be much better. All right, so I think there's more news coming up, whereby they are going to open up the borders, exploring ways to open borders with JB, Batam, Bintan, and such. So I think that's a good start, and hopefully it really turns out well. Okay, considering last time our air travel bubble with Hong Kong was burst. Okay, so let's stay tuned for all this more good news to come. Alright, so DBS similarly, okay, it's been trading sideways for some time together with OCBC. Okay, so all the while is still strong. Okay, so I would say there is still more upside to come. And another stock that has been holding the STI up well is Hapa. Has been trending upwards for some time already. Okay, so I mean, it's not for you to trade, but it's showing you that this is what we'll call a very nice uptrend. It's all turning out very smoothly. Okay, so this is Hapa, and due to recent news of Capital Land, so you might want to watch some of the uh, property developer like Hong Kong Land, with Jardine Strategic and Jardine Matheson so-called merger. Okay, and Hong Kong Land is also part of their group. Okay, I don't know, because they are like what, 50% discount to book value. All right, with a nice dividend yield, they might consider privatizing Hong Kong Land. I don't know. Okay, or maybe restructure like what Capital Land do. Okay, so this is Hong Kong Land. After this rejection of in the resistant area that I've drawn previously. I mean, this is like COVID period. Before the COVID period, it turned down. So this is a major resistant area. So after this rejection, it's been hovering well for the past 1 week. In this area, about the $5 area. So if it can continue this way, right, it might turn up. Something like this. Sideways over here in February, right? Trade sideways, and then it starts to turn up. So we like to see the similar kind of pattern. Trade sideways, and then it will start to turn up. Okay, so this is Hong Kong Land. This is City Development. Okay, so because of the Capital Land news, City Dev also rallied up. Okay, and currently right now is within this congestion zone from before. Okay, so but I would say it's a good sign. 20-day and 50-day is turning upwards. And it's starting to break above this 200-day moving average. All right, so there is a high chance that it might break up and move upwards. And last but not least, I mean, I've been having a lot of questions or query with regards to this particular stock, Capital Land. Okay, and let's look at the slides. So basically, Capital Land is they are taking Capital Land private, and then they are splitting up their business into two. One is a Capital Land Development, and one is a Capital Land Investment Management. So management is basically managing the REITs and some of their private funds. All right. So what they are going to do is basically they are going to restructure. This is CLA. They are holding 51.8% of Capital Land, and shareholders here. So what they are doing is they take this Capital Land and make it private. Okay, so from here you can see on the right hand side, it's going to be privately held, and then they are just transferring the shareholding rights to Capital Land Investment Management. All right, so they are doing this thing. So the consideration here is they are distributing CICT units, a very small percentage of it. 0.075 CICT units, and CLA, this is CLA entitlement of 0.08, so they are not taking out the entitlement, they are distributing this entitlement to the shareholders also. Okay, so this comprises of like 0.155 CICT units, and this is a cash consideration, and this is CLIM, so-called net asset value per share at $2.80. All right, so this is the whole considerations, and they are basically putting here an implied of $4.10. So I think this $4.10 gives people a lot of so-called misunderstanding. Oh, I'm buy CapitaLand now $3.75, and I'm going to get $4.10, for the everything. Okay, so I just did a Excel spreadsheet. Take like 5 minutes of my time, and hopefully I could explain it more clearly. So this is CLIM having a net asset value of 2.823 price dollars per share. This is a cash consideration, and this is CICT current share price of $2.12. Okay, so CapitaLand is going to distribute 0.075 shares of CICT, CLA 0.08, total 0.155, okay, shares per CapitaLand shares that you own. So the total amount that they are implying, right, is this a total of about $4.10. Okay, so this is what you read from the so-called newspaper, the report that they put out. Okay, now considering that when they came out with this news, CapitaLand was trading at a price of 0.8 times net asset value. Okay, which is why I draw this amount. So if we were to put CLIM at a 0.8 times of a net asset value, right, you'll put their actual price at about $2.25, which come up to a CapitaLand price of $3.54. Current CapitaLand price at $3.75, it will be like overpriced. Okay, if I do this comparison at a 0.8 times net asset value of this CLIM shares. Okay, so currently it's trading at $3.75, which will put it more closely to a 0.9 times net asset value, which is what CapitaLand price right now, $3.75, right? They're trading about 0.9 times net asset value. So this is currently what the market, or so-called the analysts or market participants are valuing this CLIM, roughly around like 0.9 times net asset value. Okay, so I hope this could explain clearly why CapitaLand price is trading at $3.75 instead of $4.10, or at least $4.